Today I'm speaking with Dr. Alastair Cowden, Managing Director of Altona Mining. Alastair, thanks for your time today.
My pleasure.
Alastair, Altona has recently just signed a binding framework agreement with Sichuan Railway Investment Group to fully fund the Cloncurry project into production. Can you explain the significance of this deal, please?
It's a really significant deal. The company has had this project in one way or another for 10 years or more. And since the expiry of an option agreement some 2 years ago, we've been searching for a partner or a deal. The principal significance about the deal is the amount of money that Sichuan Railway are putting in, or SRIG as they prefer to be known. They're putting in 214 million US dollars, which is about 280 million Australian dollars at today's exchange rate. Altona has to put in some money, around 38 million US staged, but together that money is more than enough to fund the capital cost of the project. The other most significant thing about it is that SRIG are a very large group, strong balance sheet and a real desire to do business outside of China. So I think we've found a really great partner and a solution to fund this.
Who are Sichuan Railway Investment Group?
Sichuan Railway Investment Group are a state-owned enterprise. They're owned by the Sichuan province, which is in far western China. Probably the most famous thing from Sichuan is the cooking, lots of little chilies, and pandas. The giant pandas are in the mountains behind there. They're a very large engineering and construction group. They have a turnover of I think around 12 billion US, and they build bridges, toll roads. They've built the second biggest span of a bridge in the world in China. They've done the first deal outside of China in Norway to build a large bridge and road there. They're rated by Moody's AA+, probably better than almost all Australian companies, because the government stands behind them, and they have a large balance sheet. So people, I think, perhaps get a little fearful of Chinese groups. But what we have here is a sophisticated, accomplished business that's looking to grow its business. There's nothing to fear from having a Chinese partner. They build things, they do things, and hopefully they can help us build things and do things in Cloncurry.
Now, what are the advantages of this deal compared with more traditional funding agreements?
People would be aware of many companies in recent years who've hit trouble. Generally a single mine company, and a common theme is debt. Debt's okay, but generally it's aggressive debt. A single mine company, something goes wrong, the company gets squeezed into all sorts of trouble, emergency fundraisings and shareholder values diminished. The other thing that usually comes with aggressive debt is aggressive hedging. And in this climate, hedging your copper price when the copper price is, everyone predicts it's going to go up. How much, when, don't know. You'd be taking out much of that upside. This deal, the best things about it are no debt. It's fully funded, no debt. So cash coming in from day one. No debt, no hedging unless we want it, which we can do in a wise way within the joint venture. And no issue of shares to Sichuan Railway. This is an asset level deal. So Altona is preserved. It can command a takeover premium, it can do other things. This is an asset level deal. So what it does is essentially financially de-risks the project completely, assuming we deliver on time, on budget.
Under this deal, the agreed value for the Cloncurry project is US 105 million, which is significantly higher than Altona Mining's current share price. Why is this?
Well, the market's the market, and it gets it wrong. If the market didn't get things wrong, there wouldn't be any stockbrokers out there buying and selling shares. This has happened to us just a few months ago, last year. When we announced the sale of our Finnish asset, the value in the share price for the Finnish asset was maybe some 40 million, maybe 50 million, if well, whatever. The sale, when it concluded, was 112. Markets get things wrong. They're fearful that you come dilution, come an equity issue, that you're never going to fund it, that the money you have in the bank will just be frittered away. Well, we've proved them wrong. We've delivered a value that is well ahead of the 15, 20 million or so that's implied in the share price, 105 million US. But not only that, that's pre-deal money. What the assets, once the deal completes, that we will have 40% of about 330 million Australian in cash plus the project. And I suggest that's worth an awful lot more when than the current value in the share price.
How large would a mine at the Cloncurry project be, and what would this mean for local employment?
The feasibility study, which is now a few years old, envisaged a 7 million tonne per annum, fairly conventional open pit and crush grind flotation concentrator, producing around 40,000 tonnes of copper, 17,000 ounces of gold per annum. That would probably settle down at a permanent workforce of around 280 people. And our preference, and I think it's the same everywhere, is always to employ local if you can. That's not always easy. You're not necessarily going to have every skill locally, but our preference will be to employ locally. However, one of the things that we will do once we conclude this agreement is to go into a stage of value engineering and revisiting the study. We've made a discovery at Turkey Creek since that, so we need to change mine plans. And it may be there's an opportunity to amend the mine plan and give you more flexibility to potentially grow production in the future.
How significant is it that this deal just came after selling the Outokumpu mine in Finland?
I think it's what it does is it demonstrates what the company is about. It's about its shareholders. The purpose of a company is to create wealth for its shareholders. And we are very much focused on that, not on creating empires. If we wanted to create an empire, we wouldn't have sold a Finnish asset and we wouldn't have given money back to our shareholders. Shareholders like that. They like getting money. Particularly at the moment, not many companies are doing that in our end of the market. And similarly, in the structure of the deal was set up here, shareholders are not exposed to any dilution and also the financial risk is minimized. So it says everything about the philosophy of the company, which is about creating wealth for its shareholders. This is not the beginning of a relationship with Strike. We do have to go through confirmatory due diligence and and regulatory approvals both in China and Australia. But once it's concluded, I'm hoping this relationship can grow with SRIG once they understand and see what Australian expertise can do. And I think as they grow comfortable, they will, because there are many good Chinese deals in Australia, many that work. Norton Goldfields just recently here, Paddington, I suggest, might not be what it is today if the Chinese money hadn't come in and everyone's made money. We've seen Panost shareholders just benefit from a whole bunch of Chinese money. Also Aquila, Chinese money is generally value enhancing for Australians. So hopefully we can build on what we've started.
Alistair, thanks for your time today.
You're welcome.